Speaking of decisions, tax time. You know, it's like trying to read another language, if you ask me. We're talking about the tax code, and it's so complicated. Even smart people are making mistakes. CPA Alan Sandersen is quite smart. He's here this morning, all morning long for the next hour or so, to tell us about some tax misconceptions. And Alan, for those filing an extension,
yes,
do they pay now or do they pay later?
Well, the answer is you pay now. Just because you have an extension to file the return doesn't mean you have an extension to pay your taxes. They want you to have 90% of your tax liability paid in by the 15th of April, whether you extend or not. Well, let's just think about it. If people had an opportunity to just extend and not pay, everyone would do that. Well, the purpose of the tax code is for the Treasury to make money. They want your money now. You can extend and file the return later, but you have to have 90% of it in on April 15th or April 17th this year.
Okay, Alan, we'll check some of the more common tax misconceptions a little later on. Stick around. Bringing the experts to you, we're talking about the tax code this morning and some of the most common tax misconceptions that could end up costing you big. Certified public accountant Alan Sandersen joins us once again. And Alan, for those who play the stock market and lose big, do they owe any income taxes?
Maybe and maybe not, but I can assure you this, the big loss in the stock market will not be your savior. If you lost, say, $12,000 this year in the stock market, and you're thinking, oh, I'm not going to pay any taxes, that's wrong, because you are limited to $3,000 a year of total net losses. The rest carries forward, so it's not all loss. But if you go in this year thinking, oh, I got this big loss, 12,000, 15, whatever the case may be, and I'm not going to pay any taxes, you may pay taxes, and what's worse, it may come to you as a big surprise. So don't go in there thinking that just because you took a bath in the stock market that you're going to wind up paying no taxes. The other place that people mess up a lot is they'll say, well, I had a bunch of sales this year, but I really had a wash. I broke even on the deal, so I'd have to report that? Yes, because the IRS is going to get notice of the proceeds. They don't know there's any cost at all, and you may get a big bill if you don't put it on your 1040.
Good advice as always, Alan. We'll see you in a bit. Back to your money this morning, the tax code. It's difficult for even smart people to make heads or tails out of it. CPA Alan Sandersen back here once again to tell us about some of the most common tax misconceptions. And Alan, stocks that didn't make any money, do we report the sales?
Absolutely. What happens is this. The IRS is going to find out if there were proceeds on the stock sale. So if you got this stock sale, you made $10,000 and you sold it for $10,000, you made no money, you don't report it. As far as the IRS knows, you made $10,000. And if you don't put it on your return in about 4 or 5 months, you're going to get this gigantic bill in there asking you to explain why is it that this $10,000 wasn't on your return, and oh, by the way, please pay us. This also happens a lot when you have stock transactions on stock options. The gain is picked up on a W-2, but there's a stock sale as well, and so what happens is people get this gigantic bill for a phantom stock sale. So always report it no matter what, report the proceeds, and then offset it with the cost.
Alan, thanks very much, and you might just have to stay here at the studios all morning long because this weather is going to be nasty today. Alan, thank you. We'll see you in just another second. Michael, thank you, sir. Now time for our final tax misconception of the morning to tell you about. CPA Alan Sandersen is back once again. And Alan, if you get paid in cash, some people say it's under the table and you don't have to report it. What's the deal?
The answer is yes, you do have to report it. The code says that gross income includes all income from whatever source derived. So just because you get paid in cash does not mean that you have a tax liability for that. Sometimes people will sit down and say, well, I didn't get 1099 for it, so it must not be taxable. Well, it is taxable, and let's think about this. There could be a situation where your 1099 got lost in the mail, it didn't show it up, but the IRS did get the 1099, and guess what? In that case, you'll get a letter in a few months saying, hello, you owe us money. Or if you have an audit, for example, they're going to look at your bank account and say, where do all these unexplained deposits come from? Or where did that Harley show up in your garage for? What did you pay for that with? It's on the tax rolls. The tax dot's got a license, but you don't seem to have paid for it anywhere. So you've got to report all the income and get taxed on it. Otherwise, you're setting yourself up for a big loss.
Okay, Alan Sandersen, we appreciate your time all morning long. Thank you, sir.
Thank you, sir.